Here we are, Emery.
Hello, hello, everyone. I am with the marvelous Coach Jay, coach of the Lunatics, here for Market Kickoff. Welcome, welcome, everybody. We've got a pretty interesting week ahead of us. Well, every week's interesting, right? Top things in the news that I really want to talk about. One, um, Jay Jay was telling me that the PPI is going to be Wednesday, and then we have a CPI on Thursday. Is that right?
That is correct.
Also,
Yep, that's correct, Emery.
yeah. And so we had gold breaking out and bonds breaking down, which tells us that rates are going to continue to go up, even though the Fed might lower rates. What's going to happen is the spread between what the Fed gives us and what we can go to our bank and borrow at is going to widen. And so that's going to be pretty interesting. The next thing I saw was that copper production is slowing and long-term demand is rising. So a supply shortfall could be ahead. We had some news that's made copper really volatile, but it might make an interesting trade going forward. I'll put some notes up for those of us that sit in the Topstep Discord, which I would say definitely you go there. There's so much information. I'll do some machine learning stuff, and we can see where a good place for copper to take a trade that might be long that we can get into day after day after day, just buying the dips. So that being said, what are you looking at this week, Jay?
So I'm looking at what the market's response will be to Friday's price action. Right, we know we had NFP come out. We had all the jobs data that came out last week. The market, we saw the S&P make new all-time highs, and it's made new all-time highs the way it's made new all-time highs this entire year so far, where we have an all-time high and then a very strong sell-off in the market. Uh, so I'm looking to see, and I'll transition over to my screens really quick. Uh,
Please.
Looking to see how the market responds to this. Right, if I'm looking at a daily, I'm on the Nasdaq chart right now. A lot of indecision on that daily candle on Friday. Wicks, huge wicks on both sides. So what I'd be looking at, Emery, if we go down to a shorter time frame, is the range of that NFP candle. The low of it,
Uh-huh.
23,725. The high, 23,845. Just watching the market's response to that, right? Do we see buyers accept back into this range? And then if so, we're pushing back up to the other side. And then if we zoom out again, go back out to the daily, we have the 20 and the 50 moving average, this yellow and purple line on my screen. On the downside, I'm watching the market's response to that 200 moving average. Sorry, to the 20 moving average. 23,609 is that price. We're in an uptrend right now, but
Uh-huh.
a reluctant uptrend, and we see it in the Nasdaq. The Nasdaq hasn't made all-time highs
Uh-huh.
when the S&P has. So does tech catch up? I would, going into the week, maybe expecting a little bit of consolidation over the first 2 days with the inflation data coming out later in the week. But all week, I'll be watching how the market responds to this 20 moving average. Do we continue to see daily closes above it? Or if we start to see daily closes below it, are we then testing that 50 and maybe even lower? But I'm bullish, cautiously bullish this market. The data we have gotten isn't great, but it doesn't really seem like the market cares, right? We get bad jobs data and we make new all-time highs in the S&P. So
Yeah. Yeah. You brought up a really great point. I'd like to ask a question about it since I love talking with traders, especially good ones, and you're one of my favorites, as you know. Um, when you find when you look into those bigger time frames and you see that indecision, what I notice with a lot of traders, particularly that I work with, they in these spaces of indecisions, they focus on inadvertently, they end up picking C setups or C minus setups. How do you keep yourself out of that. Now, for me last week, all I saw was B and C setups, B minus and C minus setups. So I literally only made 4 trades last week. And so when you come into these spaces and you go, okay, I know I need to see price resolution around these areas, how do you keep yourself from the activity of trading versus the productivity of trading?
And that's a great question. I think it really is trying to remind myself to not uh, force trades, not to look for trades, and maybe have trades find us. Especially with this indecision here. I know for me on Friday, I had a losing day on Friday because I was kind of leaning to the long side. And initially, after that NFP number came out, we saw a positive market response. I was buying, right? Took a long in the Russell, was a pretty nice trade, and I think held on to that bias a little bit too long where the market didn't agree with it. So for me, Emery, it's just a constant reminder to check in with what the market says and not what I want. And then if I'm aligned with what the market is saying, then we can take good trades, right? If I'm forcing my opinion on what the market is doing, then hopefully the market agrees with me. But if not, then I'm going to pay for it. So with the indecision in this candle, in this daily candle here, I'll identify those ranges, right? I'm gonna map out the NFP range, 725 up to 845, and then I'm looking at the daily candle low, which is down at 23,509 and 23,609. Anything in the middle, especially if we have a flat VWAP, is just telling me to be patient. Um, or trade it like a range bound market. For myself, I know when I trade range bound markets, I find myself exactly in the middle. That means don't trade. I should be okay sitting here. Emery, we were just talking about, I'm in the middle of a move right now. If we see range bound markets flat VWAP, that's time for me to start unpacking stuff. Uh, because
Good
it's
plan.
it's not a time that I'm going to make money. Definitely not. I'm
Yeah.
donating at that time.
Yeah, exactly. And I think that that's, as traders, we always have to balance that activity versus productivity in remembering that really the goal is to put ourselves in places where we can make money. And so the next question I have for you is the following one that I would basically look at. So the last two positive candlesticks you have show, oh no, sorry, the last two negative candlesticks you have show a range that gives the support of one candle being the resistance of another. And both of those are high volume. Yeah,
Yep.
relatively speaking.
Right.
So if you're staring that down, when you collapse into a tighter time frame and you're looking at those ranges, what do you tighten up your stops? Do you shift the amount of room you give the trade, or
So
how do you do that?
you're saying if we're trading around this what was resistance that became support, how do I
Yeah.
trade around this area?
Mm-hmm.
Well, for me, first, what I'm doing is looking for a reversal pattern and trying to remind myself not to just take a trade based on a level, because we've all drawn levels that break. So it's waiting for a clear reversal, whether that's a 3 bar reversal, whether that's the J trade that Coach Paul has
Coined.
coined, where we get this high volume into a demand level, and then the close above. And now my stops are just, what they should be. What I've suggested based on Coach Paul's suggestion as well, when we have new traders and they say, hey, what should a new trader learn? It's how to me, it's how to trade with a 2 ATR stop, right? Based on the time frame that you're trading. So if I wait for a trade signal, which is this confirmation here, my stops don't have to get wider than they need to be based on market structure, right? In this case, 2 ATRs, I'm looking at a 3 minute chart, was 80 points. If I actually wait for confirmation here of this candle close above this high volume range, there's a 2 to 1 trade potentially in this, right? And now 80 points might sound like a lot, but I have to trade it with, a contract size that fits my account, right? I have to trade it with micros, or, trade it with minis if I can facilitate that, if my account can facilitate that trade, right? A lot of traders might look at an 80-point stop and say that it's way too much. How can you afford that? But your account can tell you.
Yeah, for
So
sure.
when we get into these demand areas, this resistance that became a support. Uh,
Mhm.
First, it's waiting for confirmation that it is a support, and then second, it's just taking the trade and then trusting it from there. I was re-listening to Trading in the Zone this weekend. Uh,
Oh, so good.
Such a great book, right? But like
You know?
actually accepting the risk. How many traders actually do that? Where we assume that we're accepting risk, but we really don't. In this
Yeah.
case, if it's a good trade setup, it's kind of what you have to do.
Yeah. Now, do you ever implement that rule that Hoke has about coming into 10% of your target if you or will you let that be defined by relative trend or what you see the market doing? What do you
No,
do there?
for me, if I'm trading multiple contracts, I'm usually not holding a full position to the final profit target where I'll scale in and out. It's just the way I've chosen to manage trades, where I've had, a 2 ATR profit target or 2-to-1 profit target on a trade, and I'll just say, "Oh, yeah, I'll leave it on." And then you see the market come to within a couple points of your exit and turn around and stop you out. That just always kind of threw me on tilt as a trader, Emery. So I'm going
Same.
to take profits as the market presents. Usually I'm trying to take more than one contract so I can scale out. And
Mhm.
then, I may hold a percentage of the position to a final profit target. But yeah, I'm usually not trying to take profits until we get to a 1-to-1 at least.
Mhm.
Because then I can pay for the trade. Uh,
Yeah. Yeah, that's good sense. Yeah. I like one-to-one trades, especially, if if as a trader what we're learning to do is get into a position when the setup is an A or a B plus, and then get from support to resistance, then that's a great place for the trader to go, oh, look, I did that. It builds a little bit of confidence. And then you can go, all right, if I did this again and I see where the market went, could I have extended it? And what market generated information came my way to allow me to do that? And so I have this, how sometimes they say, hey, you don't get smarter after a trade gets put on. I think you do with market generated information,
yeah,
right? I mean, you can get in and go, holy cow, I did not expect that to happen.
right.
You know what I'm saying? And so that ends up being information that you can say, well, I think my trade should be adjusted or moved a little bit differently. So, but that's just me. I love when you come on because the longer that I'm trading, really focusing on volume, the more I see how similar our trade structures are. I
Okay.
don't use that 3 minute, I'll
Right.
use a 5 minute, but it was sort of like, you remember Friday, we stayed for hours in that awful range, right? We
Yep.
were there forever, it felt like. And so, what I was mentioning to the traders was, hey, you don't want to trade this until you see where the volume is defining itself from those big spaces, right? And so we could see a 5 minute candlestick that had a ton of volume, like, ooh, here we go.
Markets are open.
Yeah. And by the way, folks, we opened the market with very negative delta from Friday. That is something that suggests that bounces are going to lead to sell zones. Just just a piece of information. But coming back to looking at those 5 minute candlesticks that will tell you, hey, listen, you've got relative ranges of support and resistance. And if you hold the frameworks, you're going to be in pretty good shape. So, for instance, at the end of this 5 minute candle, you're going to see traders jump right in right here at this 3:55 candle Eastern time. You could see them jump right in. Now, you might go, gosh, why'd they jump in there? The highest volume candlestick on the 5 minute puts them in a space where you go, whoa, they're going to try and hold that level to the upside. If they don't, they're going to stair step down into the other areas of heavy congestion, like we spent. I mean, good grief. We were here literally from 11:20 11:20 a.m. Eastern time to essentially this 5 o'clock, excuse me, this 4 o'clock candlestick. We were all sitting right there all day long. So, it's a volume shelf that's sitting in that space. And if they lose that edge, you're going to move a little bit down. But the question then, and we'll go right back to what Jay was saying, hey, on the daily chart, we are seeing a very sideways formation filled with all kinds of indecision. So that's got to weigh on the trades that we take. We can't just jump in and go, oh, I'm going to take this 5 minute low of this candlestick and then I'll be, whistling Dixie or whatever, right? It's just not appropriate for us to do that when we are staring down markets that are essentially sideways, right?
Yeah. I think it's really hard. I'm thinking about like 2 years ago, right? 2023 was
Mm,
I think a way easier market to just buy and have the market continue higher, right? Where we had a lot more uh, conviction. It felt like to the upside. We're still making all time highs in the S&P, but it's if you're not careful with that buy the dip mentality, you could buy a day like Friday, right? Where
yeah.
it looked really good until it didn't. And we've seen a
Yep.
lot of those, right? Look at this September 2nd daily candle in the S&P, huge wick on the bottom of that candle, right? Where buy the dip is definitely the right call, and I think on a higher time
Mhm.
frame. But if we're intraday trading, location really matters because you know we had almost the the Nasdaq was up a full percent before the New York session opened on Friday, and I think we ended the day flat. Uh,
Yep.
which if you bought that dip, it was a losing day for you over there.
Yeah, for sure, for
Right.
sure. So, if you were talking to traders about um how to stop over trading, sh- do you have a 1, 2, 3 setup that you can share with them?
A 1, 2, 3 setup to look for a trade.
To yes, to say, okay, I want to see these 3 things, or I want to see these
Y-
4 things, or
Yeah,
whatever.
absolutely, for sure. Let me switch over to my screen real quick.
Perfect.
I think most of the traders who have seen me on Topstep TV, they probably know what I'm looking for here. But let's just start with where we are right now, right? So I'm going to take everything off the screen, and starting with today, let's go out to a daily. I'm going to mark out a couple of levels. We're going to look at Friday's low, Friday's high. So I'm looking at the S&P 64.53. It's Friday's low. 65.41 is Friday's high. And then I'm going to go down to a shorter time frame chart. Let's take a look at the 30-minute. I'm going to map out that 30-minute range. 65.02 is the low. We won't worry about the highs until we get there because that low comes into play first. And yet I am on the ES. And then what I'll do, Emery, is look at today, right? We can draw levels and try to identify levels, but the price action of the day is going to tell us where we're going right now, right? I could want this to go up to 65.41, but if the market doesn't agree with it, then we're not trading there. So next thing I would do is frame out usually wait for a half an hour. We can do it on a shorter time frame, but I'm framing out that first candle. And now for me, there's no trade until volume decides that it's leaving this range. Uh, if I
Gotcha.
if I take a trade, And, if I'm looking for this to break down, so I have where the target would be, right? The target would be Friday's low to the downside here. Obviously, there's some levels that were support that I would have to watch the market's reaction to when we get there. But if sellers come in today, what is a reasonable target for them? And that would be that Friday low. Uh,
Fair enough.
it seems like a reasonable target, but if there's no volume that says we need to sell down to that price, then we're not getting there. So for me, I don't take a trade until that volume decides to leave this range. Right now, we can see it, and we're just 9 minutes into the Globex Open, but we're bouncing right now. Whereas VWAP, it's still up in this range. This is telling me if I wanted to trade it, it's a range bound market. I just said that I'm not the greatest range bound trader, so this is where it's time for me to sit on my hands and wait for the market to set up. From here,
So when you
Hmm?
sorry.
Nope, go
No,
ahead.
go ahead. So when you say the volume leaving the range, explain what that means to me. Are you saying when the price leaves the range or when there's higher volume on a 3-minute candlestick outside of that range, either above or below?
Right. So, not just price. I kind of look at price just leaving that range without volume as an invalidation of what's actually happening. Right.
Oh. So
Prices.
that's kind of like a buy the dip if you were trading the range?
Yes. Right. So if price left that range but volume didn't go, that's telling me that there aren't many, at least in this time frame that I'm looking at, there aren't many convinced sellers pushing this market lower in that time frame. Right. So that would
Okay,
be a
gotcha.
buy the dip, where if all the heavier volume is higher than where price is trading, then yeah, that would be a buy the dip opportunity. Um, I'll usually like to wait
Okay.
again for the first 30 minutes just because it's Globex Open,
Same,
lower
same.
volume right now. But yeah, that would be the move there. Uh, kind of similar to what we saw in, if we look at the New York session from Friday, right? So we
Mhm,
had the news candle,
mhm,
then we had the New York session open. If we look at that range from the New York session open, price left to the upside, right? I'm looking at, again, opening range, right?
mhm,
Traders might take an opening range breakout trade. And if you look at
mhm,
this one, uh, which way did it trigger first? It actually did trigger a short first. But you can see
mhm.
all the indecision with this flat VWAP. Once that VWAP starts to turn,
Yep,
that tells me that volume is trying to move the market in a direction. And then that's, our job is to get in the flow with that and try not to fight that flow, right? If I was, a breakout trader and says, S&P is trading at 65.40, it needs to go to 65.50 because that's the next major level. If no one else in the world agrees with that, guess where we're not going? So
yep,
I
absolutely,
try to listen to that
absolutely.
flow. Does it work all the time? That's not the right question. Do I listen to the market all the time? Is the right question. That's the right question, Emery.
Oh, a resounding no
Right.
is my answer.
Right.
I wish I could listen to it every time.
Seriously.
So, when you are staring down those 3-minute charts and you see that big volume event, um, how do you look for confirmation in the trade?
So and Joby, why a 3 minute range? It's just a preference. I use 3 minute and 30 minute charts. It's just a preference thing. You can use a 1 minute, 3 minute, 5 minute. So confirmation for me, Emery, looks like a VWAP outside of the range and price outside of the range. So I would need price to close outside of this range, whether that's a three
Mhm,
minute chart or a 30 minute,
mhm.
and I need VWAP to close outside of that range as well, right? So
Okay.
are there times where I take it earlier if price, if we get some aggressive selling, are there times where I take the trade earlier? I do, but I'm also aware that if I'm taking a trade before that VWAP confirms outside of the range, then I'm accepting a lower probability, right? You were talking about, only C and B trades setting up on
Yeah,
Friday. Without
yeah,
all that confirmation, this might be a B trade. Now, the question is, do I want to still take it? And do I take it with the same leverage that I might take an A plus setup? Right. I may take a B trade with only one contract. I may take an A setup with four or five just
gotcha,
because it's higher confirmation. But right now, no
gotcha.
trade.
Okay. Do you use momentum indicators at all?
Uh not no, I don't. I
Okay.
know Coach Robert looks at the what was it, the ADX? But do you?
Oh, yeah, I
Yeah.
do.
Okay.
I do. It's sort of a big It's sort of a big
which one's
part.
your favorite?
You know, I like the MACD for everyone because it's a simple one they can find, and I can talk to them about what the pictures look like. But any momentum indicator, can work as long as you don't try to use the needle to describe the haystack, right? And so if you're seeing something like this, I've got our MACD right here, and then below it, I've got the Chandi momentum oscillator. And so he's just a super famous Indian guy that built all kinds of indicators. So this one's named after him. But for me, if we stare down, let's say we want to do some analysis on the ES right now, what I am seeing, what I suggest for everyone so that they don't have new biases on their day is to simply start with a naked chart, right?
Yep.
And so if we start with a naked chart or we just use our indicators here, I think the same one as you, it's a 20. Yeah. And so I use open, high, low, close divided by 4. So I don't really care about an exact close. What I'm looking for is really the slope and range of price action. And then my favorite thing to do is draw a box around the highest volume candles of the day. That's usually the first 30 minutes of the day and the last 30 minutes of the day, but not quite that way um for Friday, which I find to be very interesting
Right.
because we had this the NFP come out, and that had a little bit of volume. It had more than the average volume for that time of day, of course. But then the opening range candlesticks just didn't hold that. So if you said, hey, if I looked at an hourly candlestick, then you would see that still between 9 and 10 had way less volume than between 10 and 11. So the traders were looking for something, and I guess they were looking to see whether all these shorts would take control, which I thought they would, because the day before we had left so much. I mean, literally, I saw $60 million go through in the puts
Oh, wow.
on yeah, I mean, boom, 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 day after day. The 2 days before, you could see millions and millions and millions of dollars being put on that put side. And so everybody was short. And Hoop and I were talking about they were buying all these puts right here, and the market just kept climbing. And we both said, you know what? This is going to be a gigantic rug pull. And it was because you could see where the traders were setting up. So right now, the traders have a call wall at about 6,550. That's the
6550.
top of the edge.
Okay.
And the bottom is right around 6,500 is where they have that put spread. But then they've got GEX levels. The lower gamma levels are well below at around 6,440. So there's a lot of price action, back and forth flow that you could see. So my recommendation to the trader is to say, listen, define what your A plus trade looks like. Define what your B plus trade looks like, and only take those, because what ends up happening to us is that we churn ourselves up in the market over and over and over again because we're so desperate to get in and make money that
So
we'll get in. I mean, you jump into a pond with a bunch of alligators, something you don't want to do. but we do it over and over again, and we find ourselves in this wash, rinse, spin cycle over and over again with our trades. And so we blow up, we reset, we retool, and 2 years later, we're just doing the same thing, right? And there are a
Great point.
lot of traders in that space.
Yeah.
I stayed in that space for a long time in my trading career until I went, wait a second, there really is a difference between activity and productivity. And just realize that you can build your productivity by sitting still. Because imagine this, if you could pick the 10 worst trades that you've ever had and have those completely out of your portfolio balance, how much bigger would your balance be? I can tell
Yeah.
you mine would be way bigger because I have made some colossal mistakes in my trading career because I don't pay attention to finding where edge suits me. And my edge comes from staring down the volume. So for me, here is our 30-minute candlestick formation from Friday. So if I'm staring that down and I'm looking at an upward draft in momentum, an upward draft in my oscillator, and the biggest volume candlestick in the recent past is this one, I could buy the dip and sell it right here at the old resistance level. This to me is a B trade. Why is it not an A trade? One, I'm trading in a space that could be a short or a long. So it literally is a range trade, just like Jay suggested it would be. But I have trend that's down. My VWAP is down. My MACD is sitting in negative territory, though it's turning green. But I know from the volume participation that the traders are going to try and hold that ledge. It's also our point of control on the charts for the last 3 trading days, right? It's right there at the point of control. So that gives me a B plus setup. Perfectly you can take. What what the developing trader needs to work on is finding verbally what that setup looks like and simply waiting, right? If you let's say you're taking I don't know, let's say you're trying to take one of the high speed trains and you're headed to I don't know, Croatia.
Okay.
But you just look at the trains going by and you go, okay, I'll just get on this one. You could end up in Slovenia.
Yeah.
You could end up in Germany. You've got to put those spaces around where you go, oh, this is a good trade, and this is a good trade because, and then most importantly, where's the risk? And so that is truly our most important thing. And I love the way you frame out those 2 to 1s. I don't do that simply because, sometimes my brain tells me that there's a bigger piece of the pie coming my way, and the market goes, I'm sorry, you're only going to get a sliver.
Yep.
And so yeah, that sort of forces me into a space of, I know where my risk is, I know where my potential reward is. Just so long as my risk is defined, I'm in. And that's a big thing. Now, you as coach of the lunatics, what what are you finding your traders struggling with?
So I made a suggestion early on to only trade 3 micros, and max drawdown on the account is 12% of the drawdown, right? So they're trading with $320
I
of
like
risk
that.
per day. uh, they struggled with that, right? Where a lot of the traders said it feels extremely restrictive. But what I want them to do is focus on exactly what we're talking about right now, Emery, right? Where I had Senna, who's one of the traders on the Lunatics this season. He was on Topstep TV with us, and he's probably going to hate me for continuing to bring this up. But we were in a group meeting, and I'll ask the traders, "Hey, who's in a trade right now?" And I had them all send me what their A plus setups were. And this one meeting we had, Senna's like, "Oh yeah, I'm in this trade." So first question I asked is, "Okay, give it a letter grade. The setup, not the result." And he said a C. So then the follow up is, "Why are you in that trade?" And uh, no, we took it off. So I think what I'm trying to get the traders to do, and I think it's important that we all do, is like you said, only put risk behind something that we truly have, like we truly measured, and not just for the sake of making money in a trade. So I want them to be able to do that and not risk their whole account. Right? If you're still taking low quality setups, when you leverage up, it's only going to feel a lot worse.
Oh my gosh, that is genius right there. It's so true, though. So true.
Yeah.
Absolutely.
It's gonna feel a lot worse. So what I'm trying to get them to do is exactly what you said, right? Hey, that $320 is gonna feel really restrictive, especially if you're just giving out dollars to everyone, right? If if I'm just saying, hey, you got a dollar, and 320 goes pretty quick. So staying patient. I think some of them have adjusted. And I said it was just a suggestion for the first week. No more than 3 micros. And then keeping your daily loss limit to 12% of the account. And then after that first week, they can do whatever they wanted to if they felt it was restrictive. But I asked them to send me whatever their number was going to be, right? Because we all know at Emory, we have to pick something, right? We can't just have an open risk. At some point, you do have to cut yourself off. So that was probably the biggest struggle. I think a lot of them now are kind of realizing, or hopefully they are, what their A plus setups are. Because at the end of this, right, ultimately what I want to try to do, Emery, is the first month or so we focus on the managing the risk side, right? Managing your
Mhm.
account even in a situation where you have a 90% probability trade, but we know the outcomes of all of them are 50-50, right? So I want them to be able to manage their risk even when what they measured ends up being wrong. And then by the end of
Yes.
it, we had Lance Brightstein on about a month ago, where he said,
Mhm.
you need to leverage up into your A plus setups. I want them to only be taking A plus setups. So now we can
Yeah,
focus on being assertive when the market presents something, um, and
I love that.
hopefully seeing exponential results. But we'll see how it goes.
Yeah. Well, at the end of the day, all we can do is suggest to them.
Right,
The
right,
accountability sits squarely in their own hands. And a lot of times people they don't want to say, hey, it's on me. I got it.
right.
And really stand behind that accountability event because really if we don't, it's like going to a roulette table and throwing money down there. And as a statistician, I can tell you the worst game that you can play for yourself statistically is roulette.
Oh yeah,
The house has a major advantage, relatively speaking. So just from my days of probability, man, that was my favorite class. And I know I talk about it all the time,
yeah.
but literally I had a probability class in college, and all we did was play cards, work a roulette table, and all the things around probability. My teacher, that professor, he was so genius about building, and his tests were super hard, but he made the class so much fun. It was absolutely so much fun, but I digress.
Awesome.
Yeah. So you do have to realize that if you aren't taking A plus setups, folks, you're going to put yourself in the meat grinder, and you're going to end up with that churn. And the way to get past that is that personal responsibility event. You've got to cross the line between I don't want to do that, and I will do this. And really, a lot of us go, I don't even know why I did that. Right? But that's the same as going, I don't even know why I ate that half of that cheesecake. Really, it's because you wanted to.
Right.
You really wanted to. And so
Sometimes we
you
do things we don't need, but we want
oh,
to.
exactly. Exactly. Very,
Emery, we got
very
some
true.
questions in the chat. Jeff
Love
asked and
it.
Luisa
Yeah,
asked as well. Can we explain more about A plus setups? It really is going to be different for everyone.
true.
Um,
Y-
but honestly, I think what it is the setup that you can probably most quickly identify in the market as something that you've measured that produces results over a long period of time, right? So if like right now in the, I'll go back over to the S&P, right? And
mhm.
Varasad also makes a good question. We want to filter out lower quality setups, but we want to make sure that we're not doing it to the point where we're completely paralyzed and not taking trades at all. But so we just talked about this setup in the S&P, right? I had a downside target potentially, and VWAP never left that range, right? So we looked lower. This is telling me, at least for my setups, because it has to be something that I'm able to make money from as well, right? For my setups, this told me this was a high probability range bound market, right? And we can see it. Price left the range to the downside, Emery. Volume didn't, and where are we back at the high of the range?
Yeah.
So
Oh, that's good.
to a high
Yeah.
probability, this told me that this was going to happen, but that doesn't mean that I'm going to take this trade, right? That's just me analyzing the market movement. Am I going to leverage up into this setup? I had a pretty high probability of exactly what was going to happen, but does that mean I leverage up into this setup? For me, no, because this is not where I make most of my money, right? So this can't be A plus. I told the traders in the VIP group, if it's a range bound market, for me, it can't be anything higher than a B,
Mm. Ah, so
right?
for me,
Okay.
I would score a range bound setup as an A
Okay.
if everything was flat
Yeah.
and I had one big candlestick that was holding the range. I could trade from the bottom of it to the top of it, or from the top of it to the bottom of it. And so, when you design a trade, a lot of us go, I don't even know how to design a trade.
Right.
So when you say to yourself, okay, what makes sense to you? Remember, your personal input really matters if you're trying to build a trading strategy. What resonates to Jay might not completely resonate to me. We might look at similar things, but our approach to entry is going to be what works for me. And so if Jay says, hey, I like to look for 2-to-1 risk to reward. I like to look for these volume events to trigger what I'm doing. And I like to have my VWAP in the direction of the trend that I take. Is that right?
Yep.
That's
Yeah.
what I
That's
yes.
correct.
And so when Jay says those things, those are the three things that he's looking for. That's going to make, if all those boxes are checked, that's going to be an A plus setup. For me, I'm looking at a potential B plus setup here because now I'm looking at, notice we went from the bottom of this 30-minute candlestick. Now we're approaching the top, right? I have a downward sloping moving average from the prior day. And from the prior day, I have a downward sloping VWAP. So my thought should be I went from the top of the candlestick formation to the bottom of the candlestick formation. Maybe I'll use the top of a nearby candlestick and take a short there. And my stop will be relatively tight. My stop will be 2.5 points away. Literally, because, well, let's make it 3. That's a little bit tight. Give it a little bit of a wiggle, right? So I'm looking for a potential short at the top of this 30-minute candlestick with a little bit of wiggle. And I'm going to take it to the bottom of the box. That's going to be a range-based trade for me. And I'm going to say, you know what? That's a B plus setup. Could easily be an A setup if I didn't have this momentum indicator just looking so savagely bullish,
Okay.
right? And so that's the only thing that I would do. So if you're designing something and you're saying, what's an A setup look like? Think about what you look at the market and what makes sense to you. What makes sense when something's trending up? Both Jay and I rely very heavily on volume formations. And in my mind, those are the strongest places to look for setups because the broad market is driven by volume. It's driven by volume. The bigger players will drive the motion. And so we have to look for where they're positioning. It becomes a really nice roadmap. And so if you're staring down volume and you're like, yeah, I want to, like this one, you could say, yeah, I want to take a long, that volume's up, but my trend is down, so I can't, right? You have to wait for it to tell you that it's doing something different, right? And that
Right.
means getting in top of your moving averages or whatever. Did that answer that question, do you think?
I think it did. I think it did. Build a system that you can repeat, right? I think the
Yes.
scariest thing in trading is making money and not knowing how you did it.
Oh,
Because
yeah.
because then
Or
you try to
losing money and not knowing how you did it.
yeah, yeah. Um either way, if you don't know where your results came from, how do you repeat them,
Mhm.
right? So I think a system that you can repeat over time, and it doesn't have to make sense to anybody else but you if over a long period of time the numbers work out for you, right? Uh,
Yep. Yep.
where if you're just clicking the button, it's
Tough.
random results,
Yeah.
right?
Yeah, for sure.
We got
For
another
sure.
question here from Edwin. Do you think or agree that the Nasdaq daily chart is in the identical structure as February 18th, 2025? You want to pull up a daily in the Nasdaq, Amory? Considering that
Sure.
Nasdaq failed the bullish continuation attempt. Sorry, forgot to look at the time frame. So I think what Edwin is looking
Yep.
at is February 2025.
Okay, let's go to the daily.
We had those 3 daily dojis. Does that look
Oh, this is not the continuous contract. So we might not. Okay, February,
18? So over to the left, right there. Yeah, those 3
February
daily doji
18th.
candles. Yep.
Ooh, look at that.
It
Pretty
was
interesting. Do we think it looks like that now?
yeah, I
Is
think that's
that
what
the
Edwin.
question?
Yeah, I think that's what Edwin is asking.
I don't think so. What do
Yeah.
you think?
I don't think so either. I do see, we did have some indecision mid-August, but I don't think it looks the same. I don't think it looks the same personally.
Yeah, not remotely.
Uh,
I don't think so.
yeah, I think we would need to see, especially because we're seeing, when we have sell-off attempts in this market, they just keep getting bought back up. And
Oh yeah.
are they going to look exactly the same? They're not, right? But
Pervasive bid. Pervasive bid.
RSH says it looks exactly the same, and also that's what makes markets, right? If
Do they mean the whole group right here?
Yeah, I'm trying to think here. I guess I could kind of see what they're looking at. Let me switch over to my screen real quick.
Yeah,
So we
yeah.
had these 3 indecisive candles here that led to that sell-off. I'm gonna just mark out this range. There's a marker tool here somewhere, isn't there? me see if
Yeah, it's the thing that looks like a paintbrush.
there we go. All right. So this here looks maybe kind of similar to this right here. Right? Those two
Oh,
blue circles there. Maybe that's kind of similar. Uh, but these sell-off attempts that we've seen, there's no continuation, right? So
yeah.
far. So, the market is obviously waiting for Powell and the Fed for their rate decision on the 17th. We get inflation data. So could it look very similar in a week or two? It
Hmm.
it, it could. I'm just, maybe it does look a little similar, right? We got another this here, that sell-off candle. Maybe that's this.
Oh, I see. I see what they're looking at.
I'll switch
Yeah, I
over to your
wouldn't.
charts.
Yeah, I wouldn't. No, no, no. Let's leave yours.
Okay.
I I see. I do see what I see what you're saying.
Yeah.
I do see what you're saying. Yeah, there is some. So here's my next question, though.
Great question.
What?
Great question. I know exactly what the question is. Go ahead, Emery.
Oh no, now I'm nervous. Uh, I'm trying to frame it out so I don't sound like a jerk. Um, and so it looks like that.
Right.
And
Yeah. Yeah. How does that help you make a day trade? Is the question.
exactly.
Right. And if it does, then you have a setup that is based on prior information, which is what we want to do, right? But does that, especially because we're day trading here with top step accounts, right? If you are maybe a swing trader in a different account, or you want to build into a short position because it looks like similar structure, uh, can you do that? Maybe. But does that help you make a day trade in this situation, right? If I'm looking at this chart, if I'm looking left and I'm saying, well, in February, it looked pretty bearish and then it sold off. So it should do the same thing here. Uh, Emery, you've been trading for a long time. How often has the market looked like something and done something else? Right. So especially in a shorter time frame, right? Can I only
Yeah,
sell because this price action looks like February's price action?
yeah,
Uh, Greg asked a good question
yeah,
here. Maybe it helps you sit on your hands a little bit. What I will say
yeah,
is that this indecision up here, and I think we said it earlier, the indecision uh, keeps me out of just blind buying the
yeah,
market, right? It does keep me out of that, right? So it's not just that, hey, just buy it wherever you want, because there's still a lot of uncertainty. Uh, but am I looking for a similar sell off to what we had earlier this year? I'm gonna say no.
yeah. I mean, listen, legitimately, we certainly are going to see a sell-off at some point
Right,
because markets don't go straight up. But the question then is, does your mind lose the thoughts about where you can make money now because you're thinking of what's going to happen in 3 weeks or 2 months? Do you see what I'm saying?
right,
So it's it's a good habit to look for like patterns because it helps you design strategies. And the market does have the type of personality where it really does repeat things that it does. The main problem is, are we staring down price action that is not relevant to what we're staring down right now, what we need to look at right now?
right. Yeah, I think it's important to stay present. Also, what you know how we'll know, Anne Marie, whether or not this price action looks like February?
When it actually does that?
When it happens, right? When it happens, let
Yeah,
some of this data come out bad or the market respond bad to a Fed rate cut.
exactly. Exactly.
You'll have more than enough time to react on a day trade to
Yeah.
get into that action, right? If you rewatch any of Top Step TV from February through April, uh,
Mhm.
everyone's sentiment was, hey, maybe this is not a buy the dip environment that we're in right now, right? And every day we got very strong sell-offs. So there's more than enough room once this move actually begins
Yes,
to catch the
that you
move
can
that we don't try to have to
capitalize.
call the high.
E exactly, exactly, exactly. That's a great recap,
Yeah.
though.
We Emery, want to take a look at gold really quick?
Oh, yes, I absolutely do.
All right.
Absolutely do.
We had I have my charts up here, but if I can switch over to yours.
Yeah. Yeah, we can look at mine. We can look at mine. So super interesting what's going on with gold. Um, Normally gold's biggest volume candle is towards the close of its settlement, right? It's going to be what is it, 12:30 Eastern or something like that. I never
Yep.
remember exactly when it
1:30
closes.
Eastern. I think it is 12:30 Central.
Yeah. Okay. So what's been happening though is that we've been getting this volume motion in all kinds of ways. And so this lines up with our jobs number, our GDP number, and we rocketed up and notice halfway through the space, the price action held. Let me make sure I got a 50% marker here. Style. Oh, crud. So we've got a price action event that literally holds the 50% range. It comes in, tests the VWAP, bounces higher, and look what happens to momentum. This is one of the main reasons I like watching momentum. As price moves higher, momentum begins to drift. And when momentum drifts, what it's telling you is the gas pedal or the accelerator is not pressed as far down to the floorboard as when it first started. And so momentum indicators tell you when traders are becoming less active in the direction of trend. Now, it doesn't always mean it's going to roll over or whatever, but it does mean it's slowing down. And when slowing down happens, we tend to have mean reversion. And so, right here at our opening candlestick, pretty big candlestick for an opening range. And traders are sitting right in front of it. Above it, 36.38. Below it, 36.22. It tested the edge here and recovered it. So this happens a lot when you see traders trying to front run. They'll go, "Ooh, I'm going to take this buy at the low of this area," but they don't leave their stop wide enough, or they keep they've got they're nervous, and so they get stopped out, and then price action will move right back up. But this candlestick here is going to be the one to watch, because if we lose the low of this candlestick, which is also the volume point of control at around 3611, price action should come back into 3,578. Let's see what Thursday's volume event, 3,592. That happened at 10 o'clock. Just weird buying times we're seeing now. Just these strange buying times that are, I mean, gold doesn't normally look like that. And so the fade ought to give it more buying pressure. Gold is very likely to continue up, but it does have these dramatic fades before it gets the next leg up. And so that's really something to watch.
Absolutely. I'm gonna switch over to my
Yeah.
chart really
Yeah.
quick
Yeah.
and take a look
What are you
at.
seeing?
So that candlestick that you just called out, that NFP candle.
Mm-hmm.
3609 is
Mm-hmm.
the low, 3638 is the high. And we could see it. We're kind of just
Mm-hmm.
sitting. Oh, well, we tagged 50% of it, 3625, and bounced. So for me, gold is in this uptrend. We sat in this consolidation for so long. It was 130 days that gold was in this consolidation, and then we when we finally
Whoa.
broke out, you know, the question is, with all of the potential momentum that was able to build in this range, where are they actually taking this market, right? So I kind of hesitate to short gold at all. Um,
Mm-hmm.
if it's a short trade, if a short trade sets up in a day trade, similar to what we were just talking about with the Nasdaq, right?
Mm-hmm.
Are you going to just
Mm-hmm.
completely negate any short trades? No, because it's not a blind buy market either.
Yep.
Maybe last week it was because we didn't take out a daily low, but
Yeah, it was insane.
right.
Last
Uh,
week was insane.
but I am kind of leaning towards the long side in gold. So what I would do and what I'm looking for is, as long as we hold above this 50%, which we did,
What is that number?
3624.
Yep. Yep. Yep.
3624. So as long as we hold above that, I'm looking for opportunities to buy. The target would be those 38s that you were talking about, and then from there, can we find the volume to trade higher, right? Because in order for us to make new all-time highs, we need convinced buyers, or we need buyers that have to buy, right? Somebody might continue shorting gold, and if price keeps going higher, they got to get out. Um, so maybe margin calls take us to all-time highs, but above
Yeah.
above 24, I'm looking to long. And then if I start to see volume trade below 3624, then I have to think about where might the target be. Then same price you were just looking at, Emery, 3609, the low of that candle,
Mm-hmm.
and then
Yep.
maybe lower from
Yep.
there. Right now, volume is flat in gold, so uh, I don't see a trade. But just looking at those areas for potential.
Yeah. I like it. I like it. We are going to have ourselves a very, very volatile week. It's going to be
Yep,
a lot of places to make money in the market. We just have to remember that all the things that Jay and I talk about, sometimes talking about risk is really boring. But if you've been around a long time, and remember, when you're in Top Step X, this is the practice ground so that you can understand what to do with real money once it gets to you, how to manage the risk, when to manage the risk, when to play or when to stay on the sidelines. All of the things that we do as coaches, they're to help you design a framework that works for your psyche that will allow you to trade real money in the future. That's why you're here. You're in a training program, right? You're not just in here to sling whatever, right? You're going to end up in a place that you don't want to be. So, as we bring the lovely evening to a close, Jay, thank you so much for spending time with me. Love what you're doing with the lunatics. I love that 12% drawdown. I think that's more than reasonable.
for sure.
It's really fantastic. Um,
I can't take all the credit for that. I got to give that to Coach Paul, but
hey, well, that's what we do as coaches,
great
right? We
artist
learn
steal,
from
right?
each other. Yeah, absolutely. Absolutely. Imitation is the greatest form of flattery.
Absolutely.
So, so buckle up. Going to be an interesting it's going to be an interesting week ahead, and just manage your risk. Watch your size, design a framework that works for you so that you can take control of what it is that you're doing. We've got Coach to Code on in just a couple of hours. We've got Aaron coming in for the Euro trade, or no, London Open, and then Deanna at Euro trade. We've got a really exciting evening. And of course, if you're staring down goal, that 9 p.m. Shanghai trade event is also something worth watching. Any last things from you, Jay?
Nope. Always a great Sunday getting to talk markets with you, Anne Marie. So thanks for the invite
Same.
this weekend. Trade well, manage your risk. Like Anne Marie said, this week is going to present a ton of opportunity. And I think being patient and waiting for what that opportunity looks like for you is how we ultimately succeed at this. Because on the other side of that opportunity is the opportunity to lose as well, right? So
Yep.
don't be the impatient trader. Uh, that'll be my reminder to myself as well this week. But
Mhm.
trade well, manage your risk, and I will see you all for the opening call tomorrow morning. Thanks, everyone. Bye.
Bye.